Hey, what's going on, my fellow retail traders? I am your humble host, Bear Tamer, and I am not live and direct, but wanted to take a quick moment to create this video. As I've been seeing a lot of things across social media, a lot of inexperienced traders asking questions. So this is my way of answering them in just this one video. So what I really wanted to talk about, guys, is especially, and this is more specifically for new traders. It is for new traders, okay? We want to talk about my 10 tips for new traders, okay? And I need you guys to really lock in and hear me out on this, because this is not from a place of judgment. This is a place of experience, okay? That's where I'm coming from with it. I was a rookie trader once upon a time, and I made every mistake under the book, just like every other trader in this world. So I wanted to share what I think, the top 10 tips that would help you guys based on my experience. So let's lock in. The first one, guys, is pick one strategy and master it. I've said this so many times in the past, but I really want to put a big emphasis on this. Pick one strategy and master it, okay? Often traders, they find a strategy that they like, they pick it, they trade with it, and they end up on a losing streak, and now all of a sudden they want to change their strategy. They see someone else winning, now they want to adopt that strategy. Then when that one starts to lose, they see something else and they want to pick that up, and then they want to switch. Constantly switching your strategy is not going to be beneficial to your P&L, guys. You will end up in the red, okay? There is no strategy out there that is 100% bulletproof. Everybody takes losses, guys. Our jobs as traders is to minimize the damage, right? As long as that strategy is, at the end of the day, when your P&L is green, your strategy is working. It's doing its job, okay? If you are losing on trades a lot, that may be something outside of your strategy. It can be something where you have to look on the inside, go to the mirror and figure out if you're losing for other reasons, such as discipline, not respecting your stop loss, things of that nature. But pick one strategy, master it, and it will give you the results you desire. But again, I want to repeat, no strategy, guys, no strategy has a 100% win rate, okay? The best of the best traders will take losses, okay, guys? So that is going to be my first tip to you, okay? The second tip, guys, is do not solely rely on social media as your trading guide. Do not make trades just based on what you read on a Webull feed, on a StockTwits feed, on an X feed, guys. Do not trade like that. Your trade should be based in technical analysis, fundamentals, strategy, discipline, following your rules, waiting for the right setup, whether you're a bull or you're a bear, waiting for that right setup, right? That's why you spent all that time mastering your strategy. This is what you base your trades off of. Not everyone on the social media feed has good intent behind their trades. They can be bag holding and they're looking for people to bail them out. They don't know when to leave, and when the trend is reversing, and now they just want someone to rescue them, okay? Same thing when people are spreading FUD when the stock is on the way up, and then they start spreading rumors about offerings and such and such and such, again, because they are in the red and they don't know when to walk away from a trade. So what they're really doing is, in my opinion, dragging their peers down with them. Okay. Not now, I am one of the few traders. There are traders out there that will post on the social media feeds, but we're posting due diligence. We're giving screenshots. We're giving you legitimate reasons why we're either bullish or bearish on the play. And we're always going to ask you to do your own homework, double check our work. At least I do. Double check us and double check that information. But I would try to stay clear of, oh, it's going to the moon. Oh, it's going in the garbage. Okay. I even challenge you guys just to go into that comment and just go, hey, why do you feel this way? I assure you 90% of the time you will not get a response, and that should tell you everything you need to know. Okay. So the feeds are a good source of information, but it should not be what's driving your trade. Okay. Especially if you are bullish on a play. I know you love to see the pump it post, but hey, the chart is reversing. It's time to go. Okay. So don't get caught letting FOMO post or FUD post dictate the way that you trade, guys. It should all be based on your strategy. FOMO and hopium shouldn't be the main ingredients in your trade. It should legitimately just be maybe a little seasoning at the end of it, if anything, because the best of the best, we have FOMO, right? I'm not saying I don't experience FOMO, but again, I don't let it dictate the way that I trade. So that's going to be my second tip for you guys there. All right. The third tip, be open to feedback. Just because, and I'll speak for myself, just because I'm giving you feedback that goes against what you want the stock to do does not make me your enemy. There's a lot of traders like myself that will try to help you guys in these social media feeds to say, hey, this is what's really going on with the stock. You know, I would be careful. I would watch your levels, have a stop loss just to protect yourself. And the reason why we do that is because we truly care. It doesn't make us your enemy. It's not that I want you to fail. I think new traders have a hard time understanding what's a FOMO post, what's a FUD post versus someone that's genuinely trying to help them out. But I say as a trader, especially when you're a rookie, be open to all feedback. The best traders in the world make trades based off of information. They want to have as much information as possible when they're in a trade, before they get into a trade, when they're considering exiting a trade. You want all that info. So again, be in control of your emotions. I get it. You know, your emotions are high. You're feeling good about a trade. You might be in the red and you're pissed off already. And the last thing you want to see is Bear Tamer come in there and talk about, hey, this is going to tank, guys. This is why it's going to tank. Yes, I get it. You're not trying to read that, but that doesn't make me your enemy, guys. All right. Be open to all feedback, even if it goes against your trade. Okay. Trust me, it can save your life. There's been a lot of people that have saved me from losing money because I was open to feedback. I would see the comment, go and double check what they're saying. And if I confirm it to be true, wow, thank goodness I didn't dismiss that. Okay. So enough with the jumping in the comments and cursing them out and telling them to be quiet and, you know, doing all this other crazy thing. Be open to feedback. Double check, make sure, because at the end of the day, guys, it's your money. You want to protect your money at all costs. All right. So remove the emotions and be open to feedback. All right. Next thing, guys, is the next tip. Trade the chart. Okay. Respect the trend. Again, this is going to go back into that FOMO and hopium space, guys. Trade your chart. What the chart is telling you, if the chart is going up, you see the trend going up, you go bullish. If the trend is going down, price is falling, you go bearish. Stop trying to fight the trend, guys. The FOMO post, the hopium post, all of that, guys, it's not going to change a thing. Again, guys, trade the chart. This one is a very simple tip, okay? Follow the trend of the chart. Forget the social media feeds. Forget what your friend is telling you. Forget any of that. This is your money on the line, guys. All right. You want to trade the trend. Follow the trend. Do not go against the trend until you see a reversal. Once you start seeing a reversal that's going to go in your favor and it's confirmed, then by all means, do what you must. But until that point comes in, guys, do not try to force trades and go against the trend. You are not going to win. You are just one solo trader going against millions that are following the trend. Okay, so that's going to be another tip there for you guys. All right, another tip. This one is very important. When you're entering a trade, guys, you should have a price target already set up in your mind, as well as your stop loss. Okay, so for me, my stop loss is 20 cents. My target is typically 40 cents. Try to double up. If there's more to it, I'll make more in the play. But the point being is, guys, when we get into these trades, we should have an idea of where we want to collect profit, where we want to minimize damage as soon as we get into the trade. So many traders get into these trades and they'll be up and they don't know what to do with themselves. They refuse to collect profit because they don't have a target in mind. They're just, you know, thinking about the Lamborghini, but they're not thinking about the Lamborghini being towed off the driveway. Okay. You should always go in. That should always be part of every trade that you're making. It should be part of every strategy. When you are entering a trade, you should have an idea of what your stop loss is going to be and what your profit target is going to be. And those should be executed immediately. Okay. There are group orders, bracket orders, whatever you want to call them. Those orders exist for a reason. You can literally place one order that's going to get you into the trade and it's going to give you your stop loss and your take profit. Okay. Especially as a rookie, especially if you're not emotionally there yet, not mentally strong enough, guys, to do manual stop losses and manual, hitting the buy and sell button when you're supposed to. you should have those orders automatically put in there, okay, guys? Especially when you are a new trader, you're struggling with discipline. Do this to protect your profits at all time, guys. Again, I want to repeat, when you jump into your trades, you should already know what your price target is and what your stop loss is, okay? And everyone likes to be nice and conservative on the stop loss, but the price target, they want to aim for the moon. Guys, not every play is going to fly $10, okay? Not every play is going to go up $5. Look at the trade in front of you, read the chart, and take what the stock is giving you. If it's just 50 cents, it's 50 cents. If it's $1, it's $1. Not everything is going to go to your price target. But again, I see a lot of new traders having unreasonable price targets based on what other stocks did in the past, okay? Don't do that. Have reasonable price targets, okay? The next one that I really want to talk about here, guys, is if you chase a stock, right? And chasing is bad overall. But if you're going to chase a stock that is already up significantly in price, guys, I highly suggest you do two things. You want to wait to see confirmation, right? You want to make sure that, hey, if I'm buying this thing, it's already up 300%, right? That doesn't always necessarily mean that the play is over and it's going to come crashing down eventually. There might be another 300% in that play. But your job as a trader is to, if you're going to buy that high, you want to make sure that all the indicators are cooled down. You want to make sure that you see confirmed support at the higher price points, okay? I get it. You see something running, taking off. You're thinking about a past trade that you missed out on that went crazy. Forget all of that, guys. In the moment, it's a new trade. It's a new day. You guys have to make sure you're doing your best to protect your assets, okay? So yes, chasing for the most part is bad, but there are moments where chasing is okay, but you have to confirm that there is support up there. You don't want to jump into something that is overbought, overextended, and the charts is reversing on you, okay? You want to wait for confirmation. It is okay, all right? And that even goes for even getting into a regular trade. Wait for that confirmation of support, okay? You want to make sure that when you're putting in that stop loss, that stop loss is going to hold strong for you, okay? If you ever wonder why you get tapped out so quickly on a stop loss, it's probably because you're most likely chasing something that's up high that's getting ready to drop significantly, okay? So again, guys, remember, wait for that confirmation, all right? The next one is going to be let the past go, guys. You took a loss yesterday. I feel you. It sucks. It is what it is. It's a part of the game, guys. All right. When you wake up the following day and you get ready to trade, you cannot have that loss in your mind dictate everything that you do, guys. It is going to mess up your trade. Okay. It's going to make you do mistakes, right? Those mistakes are either going to cost you opportunities or it's going to cost you even more money. Okay. And what I mean by that is, when it's going to cost you more money is that, let's say yesterday you took a $2,000 loss and here you are today, you're trying to revenge trade, right? Even though you're up $1,000 on the stock, you refuse to sell because you're like, I need to make back what I lost exactly or more. And guess what? It reverses on you and tanks. And then now you lost another $500. So that losing streak continues, right? Or it can cause you to miss opportunities. I took that $2,000 loss on that stock yesterday. Guess what? Here's a stock that has this stock is the next big thing. And you see it lining up. You see everything falling into place, but you're so scared to take the trade because all you keep thinking about is the last trade that I took, a similar setup, whatever it was, I lost on there. So you know what? I'm not going to jump into this one. And then you will watch that one fly $10. Right? And now you just missed an opportunity not only to make up that loss, but to make significant gains, okay, on top of that. So again, guys, let the past be the past, okay? When you're losing, yes, assess why you lost, analyze all of that data. But again, guys, you want to let it go. You have to move on. The next trade is the next trade, okay? So please do me that favor, guys, because it will cost you, all right? Also, especially for new traders, once you have hit your daily goal or you have reached your loss limit for the day, turn off your phone, laptop, iPad, whatever it is that you're trading on, turn it off, okay? You have to exercise discipline when it comes to this because, again, you have little experience, okay? Yes, there are some traders that reach those limits and they'll continue to trade, but those are more experienced traders, okay? For the new traders that lack discipline, they're not fully in control of their emotions yet. They're not mentally strong yet, guys. If you are fortunate and you make your daily target, turn it off, and then you start again tomorrow. That's why it's called a daily goal, right? Once you achieve that goal, you're done. Okay. Same thing for your losses. If you say, hey, I lose 300 today, I'll call it a day, try again tomorrow. Once you hit that limit, turn it off and try again tomorrow. And that goes back to my example of losing $2,000. You know, it's probably because you didn't respect your rules. You were down 300, but you were stubborn and it kept on falling down. And that's why you're down 2,000. And now you feel the need to overcompensate and revenge trade, guys. Don't do that. Okay. That's what leads to things like that. Respect the rules that you create for yourself. You hit your daily target, you get off. You hit your daily loss limit, you get off. Okay. Tomorrow is a new day. There's plenty of stocks, guys. There's stocks every day. All right. The next tip, guys, especially for new traders, when you're coming into this business, into this game, guys, I recommend paper trading, okay, to test your strategies, to test the market, just to get a feel of things, right? I would say paper trade. Now, I'm going to be transparent with you. I did try that myself, but for me, I'm someone that I need to have skin in the game for me to feel like I'm actually going to learn, because paper trading, it's not real money. So therefore, whatever, I made a mistake, I can reset and do it again and again and again. If you're going to take my route now, right, where no, I need skin in the game for me to actually learn and understand, then fine. But I would suggest you take small buys, guys. Buy 1 share, buy 10 shares, 20 shares, maybe 25. You want to keep it low, especially when you're testing strategies, you're learning the market. You want to take things slow, guys. The money will come, guys. The money will come, but you have to pace yourself, okay? You can't be a rookie jumping in and just buying 10,000 shares just because you have the capital to do so, okay? This is our hard-earned money, our savings sometimes that we're putting into these markets to try and make passive income or start a career as a day trader, right? You want to start conservative, okay? So again, I recommend paper trading. And for those like myself that, it doesn't really do much for me, I need to really motivate myself by putting my own cash on the line. Just start small, guys. It's okay. There's no shame in your game. All right. The next tip that I have for you guys is do your due diligence, guys. Do your due diligence. The best traders out there are taking trades based on research. They're checking metrics, KPIs for their stocks, guys. They're looking at market caps, float, relative volume. Does it have a catalyst? What is that catalyst? Is there dilution? Is there this, that? And listen, I get it. Sometimes when you're day trading, there's not enough time to do all of that research, but you should be doing some sort of research in combination with, of course, reading your chart and making sure a favorable setup starts for you guys. But guys, the best traders in the world do their research. Everything is based in due diligence. Okay, guys? There has to be some sort of information. We just don't want to trade blindly out here. Okay. So again, that paired with, trading the chart, making sure there's a favorable setup will save you every time. You want to listen at the end of the day. Yes. Is this gambling? Yes. But I don't look at it as gambling like you're at a casino, right? Because here you have more information to place that bet. This isn't luck. Okay. If you line everything up, the company has great things going for them, a strong catalyst comes in, then you can almost bet, yes, there should be a movement up, right? But you can be confident in that trade because you have all the data you need to be confident in that trade. Okay. So again, guys, remember, due diligence is your best friend. Do the research. Okay. Even if you have a little bit of time, you can go and look for information. It's okay to miss the bottom. Okay. Don't worry about trying to get it at the lower price. Take a moment just to make sure that the trade aligns with your strategy. Okay, guys. So the more informed you are, the better your decisions. All right, guys. And that is my tips for you guys. Don't want to keep you too long. But again, guys, please, 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 if you are a new trader, please make sure you are following these tips. Okay. I'm telling you right now, the faster you learn, the quicker you adopt these things, the better you will be, the faster you will progress into a better trader. Okay. Thank you for your time, and I'll catch you guys on the next live stream.